Morning, Tom. How's it going?
Morning, mate. Very good, very good. How you doing?
Yeah, I'm doing well, thanks, mate. So, welcome everyone to this episode of the Hospitality Ops Club podcast. We have a super special guest with us today. We're interviewing Alison Wong, the CFO of House of Gods Hotel. Now, I've heard Alison talk a number of times over the last couple of years about demystifying the world of hospitality finance. She comes from all corners of the industry and has been in traditional Big Four accountancy, worked in-house as finance director across many different formats, and also worked on the investor side. She's got unique cross-functional experience, and what I love when talking to Alison is that she's really great at breaking down concepts that as an operator you often hear but maybe don't always understand. So today we're doing a deep dive into Alison's background and career, but also specific topics around growing your hospitality business, debt, equity, fundraising, the investment landscape, and insolvency. I hope you'll enjoy and take something from it.
Fantastic. Let's get right into it.
Let's go.
Hi, Alison. You all right?
Oh, good, thank you. How are you doing?
Yeah, very
Very
well.
well.
I guess as we always do you want to give us a bit of your own sort of take on your journey, talk through how you got into hospitality? I understand you studied politics, right?
I did, yes.
Yeah, so how did that go from there to getting into accountancy and then into hospitality and your whole journey?
Yeah, so I graduated from a politics degree in 2009 when there were no jobs anywhere.
Yeah, I was a couple of years before you in
Yeah,
politics.
so
yeah.
there were no jobs anywhere. So I ended up applying for every graduate job available, and Deloitte was lucky enough to have me, or rather I was lucky enough to get through Deloitte process. And actually that's where I got into hospitality. So I was working with big companies like IHG, like David Lloyd, bits and pieces like that across hotels.
I see. So you were quite early doors into hospitality, even though you were in like a more,
a more corporate background. Yeah, that's really how I got started. There was a bit of real estate thrown in the Deloitte days, but I just really like food. I like drink. I like travel. And actually working in hospitality has given me some incredible experiences as a result. That's the super easy answer.
So it obviously spoke to you from a very early point. You went into accountancy and like, it's going to be awesome. But then you very quickly saw that hospitality is specifically more interesting or different.
It's the people, right? It's super tangible. You can see it, you can feel it, you can visit it. I remember working at Deloitte and our temporary office was the tequila bar Oaxaca at one point. And we'd have the tequila bar and then it got to 6 p.m. I can neither confirm nor deny that. There were margaritas drunk.
I like the fact that, I definitely agree, like it's the physical nature of hospitality that I think I buy more than, I work a lot in tech now and, it's just less tangible. No matter how much you love the product, you can't go and experience it in the same way.
Exactly. And you can't share it with other people either.
Yeah.
I will tell people I'm an accountant all the time.
Yeah.
And then you go a bit deeper and they go, oh, actually, that's quite cool.
Yeah.
Whereas the first 30 seconds, they just go, oh, right, cool.
Yeah, like spreadsheets and
and
boring office.
Yeah, exactly. And I can't tell them how far away from spreadsheets my day-to-day is.
And that is actually something we talked about a long time ago. You went into accountancy, now in hospitality proper, shall we say. But there's so many tendrils of the industry that you can, it kind of supports all and sundry. So it's not just working behind the bar, kind of that old school view of, what hospitality is.
No, and I think even within hospitality itself, there are lots of different types of businesses, aren't there? From hotels to bars to restaurants to gyms to wellness spaces, whatever they may be. And actually they all counter hospitality.
Yeah, Tom and I talk about this quite a lot. Like he talks often about pub perspective, and a lot of the media stuff, they talk about pubs.
Absolutely.
And maybe it's just a word that means hospitality. We just had a conversation before this about paddle. It's still hospitality. It looks like from your career, like you've moved across quite a lot of different types of hospitality. Yeah. Now you're in hotels.
Yeah.
I wanted to know a bit more about your time with Virgin, because that sounds super interesting.
It was very interesting. It's obviously ultra luxury. So for those who don't know, there's a group of ultra luxury hotels called Virgin Limited Edition. They are owned by Richard Branson, so they include places like Necker Island, they include a ski chalet in Switzerland, safari lodges in South Africa and Kenya. Wow, and I was lucky enough to spend, I would say, 2 to 3 weeks of a month traveling to those places.
Yeah, incredible.
Wow.
And some of those really special experiences that I was talking about by being involved in hospitality were definitely at Virgin.
I mean, you set the bar quite high quite early, like with your sort of expectations of hospitality.
Yes, but I am just as happy working with grab and go places, a startup bar, which I have done. They are all very different. But I think they're all guest facing, right? And actually, ultimately, you can think about businesses however you want, but at the crux of it, they're all the same. You're trying to provide a really great guest experience that exceeds their expectation. That's what every hospitality business has in common.
I'd be interested to know what you took away from maybe that as a hospitality business. I remember when we spoke to Paolo Di Tarso, who comes from like ultra luxury or ultra premium hospitality dining, like it was all the same lessons as my background, just done probably with a little bit more insistence and a little bit more ability and a little bit more resources. But it was fascinating hearing that is such a key part of what they do.
The core messages are always the same.
Yeah.
Exactly.
In every business. Maybe there's a perception, if you've never worked in that ultra premium high end, that there'll be some mystery magic going on, something that's different. And it's not. Because it's fundamentally quite a simple industry. It's just
exactly.
hard
Make guests
work.
happy.
Yeah, exactly. Yeah. Give guests what they want, make them happy, kind of simple formula.
100%, but your expectations are different, right?
Yeah.
So I would expect one of the things that was always done at Virgin was that after your first drink, the next day, whoever it was who was on duty would remember that was your first drink.
Oh, wow. Even if it was a different team member?
Different team member, whatever it might be. 6 p.m. rolls round, you arrive for pre-drinks ahead of dinner, and yesterday you had a gin and tonic, and the question will be, would you like a gin and tonic?
Yeah. So that was a built-in part of the service steps, so like you had to do
absolutely.
that.
And they would, and actually, when you next come back, if you go to another property within the portfolio, they would know that your pre-dinner drink is a gin and tonic.
Yeah.
Wow.
That's great.
And how are they actually tracking that?
It all sits in the property management system.
Really? Interesting.
So whilst you're at the property, they hand over notes, and then once you finish your stay for the next time, it all goes into the property management system. So every guest has a profile, and you know everything. They would know that you prefer Chardonnay to Pinot Grigio or whatever it might be.
Yeah, that's great. That's great. And I guess that works in a relatively low volume, high end environment. I remember trying to implement that sort of thing, like a bit of information into service cycle in a really high volume sort of premium casual setting, using some tech. We had a decent sort of customer management system thing, but it was like impossible because of the rate of 10 people in the queue, and it's like I think you wanted go sit down, just get into the service, and it was difficult enough just to try and deliver the basic steps service, let alone that luxury. So I guess moving from Deloitte, where you got a really broad view, to something that was more specific, was that you in-house at that point?
Yes.
Yeah. Did you prefer that experience of sort of being a bit deeper into an operation?
It's just different. At Deloitte, I would have at any given time maybe 3 or 4 clients that I was working on. Yeah. There would be clients that I work in consistently year in, year out, but I'd be working on 3 or 4 of them at a time. Whereas when you're in-house, you're thinking about one thing and one business constantly. There's not good or bad, it's not right or wrong. It's just different.
Yeah, for sure. I guess some people, you love the aspect of consultancy where you kind of
the variety and just the breadth of the market. Like 100%. I don't like being tied to one thing, because I guess I find I get so deep into something that then I lose a bit of context, and I feel more disconnected from kind of the industry.
Yeah. And I think the thing that I found the best switching from kind of full corporate world into in-house was that I could be a bigger fish in a smaller pond. At Deloitte, you're very much one of...
Yeah, huge organisation. Yeah.
Absolutely huge organisation. Yeah. Whereas I have more agency in terms of what I did. I had more decision-making powers, but actually I could also make more of an impact into how a business is run.
Yeah, I think it's one of those businesses where obviously a really entrepreneur is leading it. And I don't know too much about it, but from my perspective anyway, I had quite a positive story. I've got an amazing culture in the business, and Branson makes things happen. What was the culture like internally? Was it good? Was it kind of inspirational place to be and all that sort of stuff?
Yeah, absolutely was. It looked after its people really well. That's one part of it. But also, these were obviously properties in hugely remote places. Yeah. And actually, so much of the workforce were local. And actually, it brought so much business and so much education and so much training into the local community. Casper Tamadot, which is one of their Moroccan riads, basically. I don't know the exact statistic, but I would say 70-80% of the team are local people, and they were just trained up from the very bottom up, and that hasn't changed, and that sits across every business. So the impact it's had on the local community is absolutely huge.
Yeah, that's great. So after that, you moved on to
a startup bar restaurant group in London.
yeah,
So
very different scale.
Very different scale.
Did you enjoy that intensity of a startup, or like different?
I loved it. And, at that point, I was essentially the FD. You were there working with the MD, the exec chef, and the three of us basically ran the company. It was such a big challenge, but it was where I learned really to be inside hospitality in a venue, day in, day out, sitting in the bar whilst I was on my laptop, watching the world go by.
Yeah.
And actually really understanding what operators needed to know from a finance perspective. Is very easy when you're sitting in a head office somewhere in your lovely air-conditioned space in front of your 5 screens.
Yeah.
Going like, why aren't you looking at these 10 spreadsheets that I've provided you with?
Yeah. Con worksheet 43.
And tab 7.
I sent it 17 minutes ago.
Why
aren't you looking at it? Yeah.
Exactly. The one thing that I took away from that whole thing is I will never, ever send an operator something that they can't read on their phone ever again.
Okay, that's really interesting.
I really speak to some finance people. Sorry, I don't know if that's a term you identify with, but and like the ones that I generally align very strongly with are ones who talk about the way they present information. There's a whole host of ones that don't seem to consider it, and it's so important. Like thinking what things do people actually need to know, especially these days. Like you have to think mobile.
100%. And can you do it on the fly? Can I have read it by the time I've arrived at my venue on the train or whatever it might be? I often get asked by other finance people, what are your top tips of, speaking to operators, etc. My advice is always start with the last 10%. Start with the end.
Yeah.
Go down to the detail. What do you actually want them to know?
Yeah.
What is the end goal?
So what is how we describe it is
exactly that.
I'm looking at something. If I can't work out an action at the end of it in 30 seconds, then I'm done.
Tell me you should be closed on Thursdays at 10 p.m.
Exactly. If I want to know more, I will go further.
Yeah.
But start with you should be closed on Thursdays at 10 p.m.
Here's why this should happen.
Do you think we are
data behind it?
Approaching? This is not related to your journey specifically, but do you think we are approaching a future where maybe that like Excel reporting style is actually going to die out now because people do want data on their phones? I want more insight than I do reporting.
I think the reporting and the data becomes red. So no one ever thinks about it anymore because, AI, whatever that might be, whatever engine you're using, it's just spitting you out the answer. So actually you will use natural language to say, this is what you should do. And you will then ask, but why? It will tell you why. It might show you 10 numbers that give you the answers to why, prove it to you, or a table or graph. Exactly.
I remember when we first started working we were at M&B, we had access as grads to something called Business Objects. It was a bit of software that was not very user-friendly. You had a little box that you constantly had to tick, but no one knew what that tick was for. So it wouldn't work if you didn't tick the little box. Things like that. So you just had to learn all these quirks of the system.
It was basically a database, wasn't it?
It was just a database, and you had to build reports in a really odd way. But you could get the data that you wanted out of it in a specific data across the whole estate. And fast forward, it's only really now, the last few years, with the advent of better tech and AI and dashboards, that there's still a lot of dashboards out there that show you a lot of things, but they're not particularly helpful data. It's just a lot of data. And you can't actually segment it the way you want, because every operator will want something slightly different. Like they want something shown in a slightly different way, or they'll value a correlation of two things in a different way to another operator. Yeah, I think it's taking a long, long time to get to this point where, as you say, now people will just say, I want to see X, Y, Z. 'Cause that used to probably be 3 physical people involved in that. You'd ask a business analyst person or
but it's almost a step further.
team.
It's more like I can just ask a question and receive the answer.
I think it goes further than that. I think you will be given the answer.
Or like I'll be given the instruction almost
Correct.
on what to do. I won't even need
These are the top 5 things that you should be doing today.
To move your site, your area, whatever it is.
Exactly. These are 5 things you should action today.
Yeah.
And then from there you may say, but why?
Or I've had this idea. Is that a good idea? Like
exactly. Yeah. Should I do this promo or not? Should I do X or Y?
Yeah. Because actually, yes, you're getting to the point where it's multi-context. Like it's not just knowing sales data. It has the context of
everything.
All data sources for the business. and the weather,
and the number of
mark-
bookings you
yeah.
already have, and whatever else.
And what
is
you did
happening.
last year on the same day, in an obvious position, not like 2 pages down where I've got to go and search for it and find it. It's all there and it's all nicely presented. Do you think that this could potentially change the dynamic between ops people and finance people quite a lot? Because it's much more of a conversation about strategy and direction rather than, can you get me this data and what does that mean and all that sort of stuff.
Yeah.
Where, if there's a shared understanding and more alignment. I think I want to come back to that. So as we sort of left off, you were at Virgin at this point. So I understand you did a bit of consultancy as well.
I did, yes. Coming through COVID, basically, I, much like Travis, quite like variety. I once went to a job interview. Someone asked me, so what are you going to be doing in 3 years' time? And I said, I'm not working here. They still hired me. So
Nice. A little bit of reverse psychology.
My attention span is not the longest. I like the variety. I like having lots of different projects, different things to think about. So it's very much that's where the consultancy comes from. But also going through COVID, I think everyone will remember this, right? There was so much will, but there was not necessarily the right know-how, particularly amongst more independent founders. You don't know what you don't know.
Yeah.
And being a founder is a pretty lonely place anyways. And in that situation, it's an even lonelier place. And there are lots of finance people out there who are perhaps less good at getting to the action, to your point, Dom. They might give you brilliant spreadsheets, beautiful tables, but they will never tell you what it means. And
what you should do.
And what you should do and why. And
Yeah.
actually explaining something in language that operators will understand. It's all very good talking about accruals and prepayments, but does it really matter?
Yeah. Most operators don't want to. They don't even want to get into that world.
But they don't need
because
to.
I'm not. Yeah, my job is the guest and the team and making this work.
And actually, an operational finance person's job is to make that happen and to remove every barrier to go, actually, I've done all the number crunching.
Yeah.
Here's what you need to know.
I guess you at that point had a really good view of startup, big company, a smaller but focused company, and a really broad view of all the things in Deloitte, and was pretty well placed to say that these are where all the gaps are in the industry, and there's still probably tons of gaps out there in terms of knowledge and just access to some expertise, that sort of stuff.
Yeah.
So
And that's really why I started the consultancy, was really just I really want to help independent operators, founders, whoever they are, get to their potential, whatever that might be. And actually, so much of people not getting to their potential, companies not getting to their potential, is not to do with will and is not to do with potential, is to do with the lack of know-how, lack of access to the right information at the right time. And I still think that.
for sure, and I think we're going through a really difficult time in the industry where there are lots of companies facing financial decisions that they probably never thought about, to do with sort of reorganising the whole business and insolvencies and things like that. And lots of people that I know run successful operations and businesses that they know there's a lot of weird and wonderful, wacky, creative, brilliant people in hospitality, and that's part of the brilliance of the industry, who create all these great spaces for people to come and enjoy food, drink and experiences, leisure, whatever. But quite often operators' strong suit isn't necessarily that detailed understanding of how to put it all together or solve the problems when it goes wrong. And all that sort of stuff. So who were you working with when you were doing that? How did that sort of play out?
It was a really wide variety. I would do small projects, someone trying to raise money, look at a business plan and just try and poke holes in it. I would do a bit of a deep dive into, okay, how do we optimize your P&L? It was varied. There were a couple of smaller food manufacturing businesses. There was a tech business. There were bars, restaurants. It's all manners of things.
Yeah.
And that led you obviously then almost over to the other side, like as an investor.
I would say that was fluke.
Yeah, interesting. Lots of things in life are,
I think it's one of the best adverts for never having a real plan. I was already doing a bit of work with Imbiba, who I ended up working with full time. Actually, it was purely on a project basis because we already knew each other as I was doing consultancy work, and they happened to be raising their second fund, so I ended up joining them.
Yeah, amazing. I think that goes back to something that previous guest said, John, making connections, making friendships. You never know when you're going to meet up with people or an opportunity is going to come your way. So that was Imbiba. Imbiba, sorry. Okay.
You'll never get it right.
No, I'll never get that right. It's because the play on words is, anyway, who are really interesting, I guess, equity house or fund, because they're hospitality focused, right? And all about adding value to operations, it's not just cash coming in, it's a whole load of expertise and stuff.
Yeah,
So,
absolutely.
So how was your experience there?
Yeah, the vast majority of everyone who's ever worked in Beaver are ex-operators across a variety of different spectrum. I came from a finance background, people from ops, people from property, etc. There's nothing that is a better experience than actually doing it.
Yeah. Yeah.
You can fundraise all you want, right? You can have huge amounts of experience fundraising. You can have huge amounts of experience raising debt, raising equity, whatever that might be. But until you've actually gone through the entire process of looking at the initial numbers, conversations with prospective investment, going through every bit of the investment process, sitting inside the investment committee, convincing investment committee members that this is what you should do, and understanding what makes someone reject or accept an investment,
Yeah.
you don't know what it actually is.
Yeah. I guess you must have seen a huge amount of potential businesses come through the
Yeah, like I assume the funnel's really big. I was chatting to I get all these terms confused. You can break them down in a minute, but like a investment fund who invests in hospitality tech, and the guy was saying that they see 1,000 deals a year, and they have the volume where they have a daily stand up in order to filter out, after everyone's decided what they would even bring to the stand up.
Absolutely.
Like what's going to make it to the weekly, and then what's going to get any form of second meeting. Like just the funnel must be so big.
It is, yeah.
Like it's crazy.
Yeah.
I guess from that you get a really good understanding of then what works out at the other end. And do you develop was there quite a strong correlation between businesses that work or don't work? I guess there's some fundamentals there.
Yeah, I think the fundamentals will always be unit economics, right? That doesn't change.
Yeah.
But I think you very quickly develop a sense, you glance through a P&L and you'll say, okay, that conversion is about right for the sector, or there's a bit more in that, or actually the head office is too big, or whatever that might be, or actually spending X million pounds or X £100,000 on a site for this return is not quite going to work in the long run. Just develop quite a quick sense of
Is it the same
yes
as
or
in
no?
sort of like in the tech world where it feels like more often than not, more than even some of the numbers, because actually they're not even usually that proven in tech, you're backing people. It feels like in tech it's, 90% you're backing the team, or maybe it's 50% team, 40% idea. The numbers don't really matter.
Yeah.
I feel like those percentages are probably slightly different in the hospitality investment.
Yes, but ultimately you are still backing people, right? Because you are backing someone to run a business well.
Yeah.
And actually, as we all know and as we've all seen, things change. Yeah. So you're backing someone to be able to move with the times.
Yeah.
And actually, if concept A doesn't work, you're backing someone to come up with a new idea and pivot to something else as well.
And we've talked to lots of people about what is that secret sauce of a business and why businesses fail, particularly when then they get maybe flipped into a different business that is broadly the same. So like a burger chain that goes bust, but then another burger chain will come in and sort of buy it, and some of those units are then successful. So what is the thing? And substantially, from a guest perspective, nothing's really changed, different brand equities and some of the names or whatever. But the answer we quite often get from serial entrepreneurs, really successful people, is like it's about the founder, it's about the person who just kind of puts their heart and soul into it. So something a bit ethereal, but probably in that is a lot of hard work and a kind of startup mentality of like, I'm just going to make this work. So I guess that is such a big part of, or it seems to be like what people have looked at as businesses that when they've failed, the thing that went wrong was the founder left. And then they've had to come back in, and I think there's some examples of that recently where people have come back in and tried to resurrect things. Yeah, so I guess that's a massive part of it.
I actually think it's, yes, absolutely. But what it actually boils down to is discipline.
Okay, yeah.
So if you think about a founder, because they've put their heart and soul into it, they will think about every penny that is spent and whether or not it's worth it.
Yeah.
They will try everything to make it work.
Obsess over every detail.
Obsess over every detail.
To a very frustrating point as somebody that works exclusively with founders, like...
There's positives and negatives, right? But actually what tends to make it work overall is actually that discipline and the fact that most founders will tend to still see every pound as their own money.
Yeah, I was going to say, does that discipline change when the investment lands? Do you see that, or do you think that's a character trait? And because that's ingrained, they've got to a point. I'm assuming that like most investments were after 2, 3, 4 sites, they were relatively fixed in their operation and the concept, and then a load of money comes in, but you still see that same discipline kind of at the tent side.
I think it depends.
Okay, yeah.
Because how many operators have you seen who have bootstrapped their first site, bootstrapped their second, done really well, got a bit of money in, whether that's from debt or otherwise, decided that every chef needs the state-of-the-art oven, and countertop in their third site, spend 4 times as much. They think they're going to do 10 times the amount of revenue. They end up doing double the amount of revenue, and it all goes wrong.
There's so many different parts of the market where that happens, where they either suddenly spend 3 times the amount of money on an opening, they choose a 4 times higher rent because suddenly we're all going to do 120k a week. What drives it? Because in a lot of ways, nothing's changed. Do people get greedy? Do they get overeager? What happens?
I think you grow a confidence that maybe you shouldn't grow.
Yeah.
You start having confidence that everything is going to fly. Because what tends to happen is that your first site and your second site has flown. You thought you're going to do 20k a week. You've ended up doing 100k a week, let's say. So then you say, actually, this was a bit off pitch. So if I move to this prime site with 4 times the rent, I won't do 100k a week. I will do 600k a week.
Yeah.
That's where the confidence comes from.
And then you go spend £2 million.
And then you go spend £2 million because if I'm going to be on pitch, if I'm going to be in the centre of London or whatever that might be, I've got to have all these things in order to impress my guests. That's not something your guests will even realise you've spent. A guest will walk into a 500k site and a £1 million site. Most of them will not notice the difference.
And sometimes the magic of what made it work in the first place was the 200k that they spent doing it, with their own hands to begin with. It is a bit rustic and it was whatever. And then it's a bit too polished and then it goes wrong. So from my perspective, sometimes I get excited by the opportunity that comes to me. And then you start convincing yourself that this is something that you should do. And in a really, we're all constantly talking about, let's do this one. And especially in the last few years where there's been a lot of movement in the property sector.
That's when you need a really, really good finance person.
Yeah, absolutely. I guess someone or property person, which I guess was where Conviva had that suite of expertise that they could come in and say, let's not get too carried away. Because I guess if something gets presented to you, we're expanding out in Leeds, here's a massive new shopping centre, here's a huge flagship site, we're going to give you a decent rent for 6 months.
Big rent free, but like the rent then 12 months later is scary.
Exactly.
And I always think of the example of what is now the Devonshire. The operator prior to that went in and did a nice refurb, a good concept that was proven elsewhere. He had other pubs in London that were doing well, and I guess did a deal in COVID, which was probably a pretty decent deal for the next 12 months. And as soon as it matured, it was like bam, done, gone. But then someone else has come in and absolutely nailed it, like the best opening ever and all the rest of it. So
but it captured imagination as well, though. To your point
there's
about
a whole
Devon.
bit of storytelling and
exactly. And actually, I think there can't really be another Devonshire. And actually, knowing that is your biggest flex.
Yeah, that's almost the outlier that proves the rule on some of the other stuff.
Yeah.
That was a very unique sort of secret sauce.
There are not many other, I guess, like founders or people who've started businesses who have gone into it with the sort of experience that those guys have to go in knowing
they can't do another one.
I think lots of other people would go into it and there'd be 4 now in London and probably be like a random one in Miami or somewhere really, really random. Could have been on a joint venture. Like it would have just like started to chip away and lose it.
I wonder, I doubt I think they probably just went in saying, let's just make something amazing. Let's just make this as the best it can be. Let's make it amazing. It's well funded, well invested, and let's just nail it. And they did. And then not thinking this would be a replicable, let's build a scale model. It's interesting when you saw loads of businesses. Was it obvious the ones that had been built for scale, perhaps without so much kind of quirkiness or maybe heart and soul, and it was obvious the ones that had been built as one and then naturally expanded out of success?
Yeah, my personal belief is that every brand and concept has a limit. And there are some concepts that should be a one-off, like the Devonshire.
Yeah.
And there's some that should be 10. There's some that should be 15. There's some that should be 500.
Yeah.
But they're all different. And actually, as a founder, knowing what you want and knowing what you have is really important, right? So the key to why the Devonshire is such a big success is the self-awareness and the control and the discipline to say, this is a one-off. We should not replicate it.
There's a business that is still really good, but it's the steak, Relais de Venise. But I always think about, 'cause I remember my friend Charlie coming back from uni, his then girlfriend who was in Paris, found this place, and it was like this amazing little steak joint. And I remember we went there when I was next in Paris. I was like, this is incredible. And a few years later, I was operating around town, and I saw one pop up, and there's one in Canary Wharf, and there's one in here, and there's one in there. And it really killed the magic of it. They're still very successful, I think. But for me, it felt like that was something that, I don't know, should have been little.
But that's also why so many brands expand and then contract and then stay where they are and actually go, actually, this is my sweet spot. I'm going through another iteration and I'm now doing really well.
Yeah.
And actually sometimes it is also sort of location driven. Like not only, but like this works, this concept, this idea, this market, we've just nailed it. Like this street, this neighborhood, this city, and it can sort of work in other places. We talk a lot about site finding. We talk a lot about that sort of decision making and how critical they are. And that can also just make it really hard to replicate because you can't even necessarily know what things you need to find in other locations.
But it takes so much discipline.
Yeah. It's so easy to get caught into, oh yeah, I'll do 40 grand a week. Like we'll just give it a go. And...
Exactly. Or because it's Clapham, therefore, this other place. It worked in Clapham, therefore it must work in this other place. But actually, because of it's London, just because you're around the corner would change your demographic
and you don't,
completely.
there's like all these factors that you just can never know. Is it that there's a slightly different flow of tourists or like a slightly less, it's a very... There are just factors that you can't know.
Sometimes it could be a tube exit that moves, and all of a sudden everyone just exits a different angle and goes down that street instead of that street. And the flow of traffic, it means they end up in that pub in the corner rather than that one or that coffee shop.
The number of businesses ruined by the Elizabeth line exits.
Yeah. Well, Farringdon is still not quite where I think it's going to end. Obviously there's that massive new development that's super exciting that John's going to be doing with the new museum of London stuff, which is going to be incredible. I'm really looking forward to that. I think transform that area, it needs it. But there were some brilliant businesses all around the market that all died. And then some investment went in because the Elizabeth line was going to change everything. And it didn't because of COVID and it hasn't opened. And then it did. And I think it's going to be a long time for that really plays out properly and the area lands to what it was. But I remember doing an opening on Cowcross Street of a business at one point. And it was one of our most successful openings. A really busy restaurant. And then you fast forward and that whole strip is now kind of a bit dead. Cause they've redone it's the overground as well, the Thames Link. They've redone the check entrance and exit.
And everyone in the city comes in less.
Well, I was going to say, I think there's been a huge
change. Travel.
Maybe in that specific, which was like, it was sort of finance, but it was also quite media heavy as an area. And are they just in that area less?
And legals. And
and workspaces, lots of WeWork and people like that. Why would you be paying for those sort of subscriptions when you can just do it from home post-COVID?
Sadly.
Anyway, so I guess this might be a good point to start explaining some of the, I guess, from an investment perspective. One of the things we wanted to talk about was what does an investment fund or private equity, sort of what does that actually mean? Break it down. Where is that money coming from? Who can access that sort of thing? As for operators out there who want to grow or scale, what are the options? Debt versus equity, bringing on board different people into your business. And can you explain a little bit about the options out there and how it worked at MBWA?
Yeah. Can we go back a step first?
Yeah.
I think every founder, before they think about any type of funding, they need to think about what they actually want to get out of it. So if you want a lifestyle business, you should never take on private equity funding.
Yeah.
Because your goals are never going to be aligned.
Yeah.
If you want 5 sites, it'd be very different. Or if you want organic growth, if you want to be super considered about every site selection that you do because you've got such a niche concept that there will only ever be 5 in the world, you probably shouldn't think about private equity funding.
And do you think do you think that there are still like a route to exits that, because I guess in some other industries, like, yes, it might be a moonshot, 1 in 1,000, but you still got the chance that like you get this like million, 100 million, £1 billion exit. Is that going to still happen in hospitality?
When was the last time anyone in hospitality got £100 million exit, Travis?
Yeah. It's not. I was going to say there aren't many moonshots in hospitality. Are there?
No, and I guess that's the thing. Like chasing private equity investment,
But you're not trying to become a unicorn, right? So I think this is the misconception about private equity. Private equity is giving you an injection of capital of X amount of money. It might give you an extra 3, 5, 10 sites, whatever that number is. And from there, you will then sell the business because private equity has to achieve an exit somehow.
I guess they're not looking for a 10 or 100 times return on their money.
No. But, on a really good day, of course.
Yeah,
but you're
yeah.
never looking for an Uber unicorn. You're never looking for a unicorn in the same way that you are in SaaS. So if you are a tech fund in venture capital, you expect the vast majority of the businesses that you invest in to go bust. And that's the reality.
Yeah.
And one would hope that in hospitality, the likelihood of your business going bust to the point where you get a zero return is minimized. You expect there to be a bit, but it's not 90%
It's not like
or whatever it
1
might be.
in 10 or whatever, like, will return.
Exactly. So if 90% of your businesses are going to go bust, your 10% has to perform incredibly well. Whereas if 10% of your businesses go bust, your 90% only has to perform well.
Yeah.
Yeah. And I think, yes, you're right, because it feels like for especially maybe a lot of the last 10 or 15 years now, the sort of founder view was the like, I need investment, not necessarily I'm going to grow slowly, I want to build a lifestyle business. I'm not sure people often stop and think what they want.
Exactly, because I think society, industry, whatever it might be, everyone says if you have a successful business, the next stage is to take on private equity investment, venture capital investment, whatever that might be.
Professionalise.
Exactly, professionalize, grow. And actually, one, like we've spoken about, businesses like the Devonshire should never grow into multi-site businesses.
Yeah.
But also, you need to decide what you want.
Yeah.
It's not easy being a multi-site founder.
Yeah.
It's a huge amount harder than running 1 or 2 great sites.
Exactly, but you just need to decide what you want and what you think you can do.
Yeah. So I guess there might be operators out there who've got to 3 or 4. Like I'm in this position where it's like, oh, this is pretty steady Eddie. One site was performing really well, 2 in the middle, 1 struggling at all times, juggling it all, and it's okay. In that position, if they want to take a step or sort of what does that look like? What do they need to do to sort of get prepped for that? So if you were sitting on a panel at Bieber kind of looking at that, what would they need to put together to even get in that conversation?
Yeah, I think it's figure out what you want and actually make sure that what you want is aligned with what a private equity or a debt provider is going to want, right? So debt, let's take that first. It's easier. It's all about downside risk for them. So what they want to know is that if I lend you £2 million or whatever that number is, in the event that everything goes wrong, I will be able to recover my £2 million somehow. That's what they care about. They don't really care about
How well you do.
exactly. They don't really care about how well you do. They don't really care about what business decisions you make. They don't really care about where your next site selection is going to be.
Yeah. Guest metrics.
Exactly. They care about the fact that you can pay your interest and loan repayments as they fall due. They care about the fact that if it all goes wrong, they can get their money back. That's that, right?
So good for people who don't want too much interest in the business. I want to just run it, but have some cash to.
Yeah, if you want to retain control.
Yeah.
But actually, you then start having monthly repayments to make, right? By and large.
Yeah.
Or quarterly or whatever that number is. But then you will have to find cash, which means you have less free cash in your business to then do something else with. So you need to be pretty sure that it's going to work.
Clear on what you're going to do with it as well. Yeah.
Exactly. Exactly. Like if you don't know what you're going to do with the money, then you shouldn't be thinking about it.
Have you seen that? I guess businesses maybe they can go out, they can raise some debt, they can get some money, but potentially haven't forward planned, or they just got maybe a bit lofty with the new site will definitely do 100k a week. The loan repayments will not be a problem. Like, is that quite common that people are not planning far enough ahead?
I think less so now because it's more expensive, it's harder. The questions being asked are harder. But yeah, absolutely. Or they will agree a loan facility that is 3 or 4 sites worth, maybe draw down too much. That's the other part of it.
Yeah.
It gives you that, to the point that we were making about discipline, it makes it so much easier to get that state-of-the-art kitchen when you've got the money to spend.
And then the debt feels more expensive and feels more of a drag.
Exactly. And what no one has factored into the equation is, yes, okay, maybe interest rate is at 5%, 8%, whatever that number is right now, it can go up.
Yeah.
Unless it's fixed.
Is it often not fixed? Like, I actually don't know.
A lot of interest rates will track the Bank of England base rate.
Yeah, right.
So as that goes up or down.
And I guess there's people who are just saying, why not? Why not? Let's get it. Let's see what we want to do with it. And people will probably saying, all right, cool. And it worked in some cases. And then as things have squeezed and crunched, it's really done for a lot of people.
Yeah. Because you've also got lower profitability now than you did as well, right?
Yeah.
So if I'm looking for some debt and I'm running a few sites and I'm like fairly early stage compared to someone at 20, 50 sites, like, am I giving personal guarantees? Like, at what point can I get out of that?
I would say the one thing you should think about if you're thinking about personal guarantee is to remember that one day someone might actually call on it. And if you are in any way not in charge of your own destiny within the business decisions that are made, you probably shouldn't be giving out a personal guarantee.
Yeah. What does it look like in the lowest of the low?
Exactly.
Sort of
You
moment.
have to catastrophize, right?
Yeah,
When
yeah.
it comes to that, how will your family be impacted? How will your livelihood be impacted?
Yeah.
What consequences, second, third degree consequences are there? And if you've got a business partner, do you really want to put your family on the line against that?
Yeah.
Because it feels like, I guess in my experience, I guess I've seen both ways where people have got very much red lines about it, but I've also seen the other way where probably people, it's a future really unlikely problem.
Me and Ben have had some pretty tasty moments where we've expanded, got hit with massive inflationary costs. Everything was getting squeezed. We were in a position where we were always okay, but potentially at some point we'd have to pull the emergency chute and sell things and sell the business and, realise not the value of the business, but whatever we could get for it in a distressed moment, which is what I think a lot of people sometimes ignore. They say, oh, I've got these assets. They're only worth what, if you really need them, they're worth what someone will pay for them. And quite often, if you're in distress, they're not going to pay you top whack. And then you get to a position where you think, yeah, that's actually really sad. If we had to sell everything, I really don't want to do that. And it's easy to use that as a bit of because it's not going to happen. Like, we've got enough experience and skill and drive and all the rest of it to get out of it. But sometimes you think, yeah, if I really had to pull that parachute, that would be horrible, grim. Yeah. We had a moment where, that was relatively close to talking about it. And so we thought we need to do something here quick, and shrunk, and now we're expanding again. But I think that's quite often especially if you don't have a finance background and you've got really, it's easy as operators to get carried away with the optimism.
100%.
If you're an operator in hospitality running your own business, you're probably optimistic anyway.
Yeah.
Absolutely.
And far too much so sometimes.
One of the questions I was going to ask you later was all around like what finance teams and finance support should look like at different sizes. But while we're talking about smaller, like SME type businesses, like what sort of support should somebody have, in your opinion? If you're a couple of sites, solo founder, couple of founders, what sort of support should you be getting?
I think you should probably have someone whose opinion you trust, who has enough of an understanding of your operations to be able to, at those points, give you that advice. It's very easy to say, oh, it's a fractional CFO or whatever. It doesn't matter who it is. You will have your bookkeeper who will deal with your actual day-to-day accounting, and that's all fine. But actually, before you make a big decision, whether that's a new site, whether that's taking on some financing, whether that's, pulling a parachute, whatever it might be, just have someone in your corner who will give you that, who will be the balance to your optimism. Because really, that is what a CFO is there to do.
Yeah.
I say no basically every day. And I don't say no because I love being the person who is the bearer of bad news.
Yeah.
But almost every conversation I have is to temper the optimism of the operator, to say, okay, would you still make this decision if you thought it was going to end at this and actually we're 20-30% down? Would you still make the same decision? If the answer is no, let's think about it again.
Yeah, I've been involved in lots of different companies, and a lot of the time you end up in turnaround situations, dealing with the problems, dealing with your tail. You've been incredibly optimistic about your cost-saving measures and the budget, and that hasn't played out in reality. You've actually spent more because things have got more expensive and all of that stuff. And you just spend loads of time trying to sort it out, right? If you don't have that, someone saying no, that kind of sense check up front, you just end up having it later, like dealing with the problems later. Yeah. And then it just takes up all your time, and you're not focused on the good stuff. I guess this sort of leads directly on. We're moving a little bit away, but how have you found that relationship with the CEO or ops people in terms of your experience? I guess particularly when you're in-house or you're advising. You said that you were the one sort of reining in. What is a good dynamic between those two roles and those two departments in your experience?
Yeah, I think they're almost two different things. So, the CEO and the CFO is a partnership, and it has to be a partnership. And you have to be really comfortable with disagreeing with each other.
Yeah.
I think the best CEO-CFO combos are ones who disagree with each other all the time. Because actually that's when you figure out where the right balance is between the optimism and the realism and the pessimism, and you find the line. But the most important thing is when you decide on something, you both face everyone else together.
Yeah, unified front once the decision's made. Right?
100%. So I think you should argue all the time.
You're quite happy arguing.
Genuinely, you should argue all the time.
Yeah.
Because if you don't argue, you're not getting to the right answer. Because then the CEO has a yes person, or the CFO is too scared to say anything. One or the other, neither is good.
Yeah.
Because you have to disagree to get to the right answer.
That's really interesting. It is something we talk about. Me and my business partner are good at arguing with each other in a positive way. And we've found lots of ways, but without it being an argument, we can question each other. Yeah. And I think that's genuinely why we work. We're pretty aligned on most things, but we will talk about stuff. But we found at all levels of the business, it's actually just really helpful to try and build an environment where you can argue with each other.
Yeah.
And it's not like some catastrophic sort of crisis, we're all getting at each other and it's miserable. Like, that's really healthy. It helps
100%.
drive, as long as you're all aware that we're all just trying to do the right thing for the business or for each other or whatever. We're all trying to achieve this thing. Argue over here, but when we turn around to, say, the team or the guest, sometimes it's we're a united front and we go and do it. And then off we go.
And the board.
Yeah.
It works every which way. But then I think when it comes to working with operators, I think the most important thing if you're part of the finance function is, how does this benefit you? Why should you be doing that?
Yeah.
It comes back to that. So, but why?
Yeah.
What should I be doing? I don't need to know the numbers. Tell me what I should be doing and why I should be doing it and why it benefits me, why it gets me closer to my bonus.
Yeah. But you're protecting operators from themselves, really. From their own optimism and exuberance.
Absolutely.
So, something I was going to ask, because this from a investor side on the outside or consulting from the outside, working with founders or businesses, do you think you get a good sense, like a PE partner, would they get a good sense of those sorts of things going on within the business? You work really closely, sort of fully understand that. I guess sometimes equity investment goes into a business and has a bad rep of, starting to just cost cut and change things and implement loads of things. Is there quite a good working relationship in your experience in the past of working within those businesses?
Yeah, I think obviously when I worked with Bieber, we're all pretty much from an operational background.
Yeah.
So we know what it feels like. We know how hard it is. I think there are often times when actually it's very easy to be able to sit in a boardroom and say, actually, the spreadsheet says this, and can you do this in 3 seconds?
Yeah.
We've all been there. And you tend to forget how difficult change management is.
Yeah.
And how long something takes, right?
Yeah.
Because you want what's best for the business. But so long as you're aligned at the start, I think more often than not, you are working together to achieve the same result. What everyone should remember is that if you take on private equity investment or whatever investment it might be, if you do well, the investment does well.
Yeah.
It's not an us versus them situation. You are there to work together. You are there to enhance the business together. I think founders, if they think that is us versus them, they perhaps needed to have done more due diligence at the start to figure out if each other's goals, coming back to what you actually want to achieve, were aligned in the first place.
Yeah. Do you think that oftentimes, founders or management teams, do they ask enough of their investors or their board members? Yes, you get money, great, but there's probably a whole load of experience that could be tapped up more. I don't know, what do you think?
I think so. Quite often board members will offer it, whether or not it's listened to, however. And that comes back to the mentality of, are we all on the same team? And actually that comes from everyone, and that is the culture of a board, right? It's whether or not you've created a board that is, to our point, can challenge each other, but at the same time are always aware that everyone has the business's best interests at heart.
Yeah.
And if you have that, then the founder investment, it doesn't matter who you are within the board, everyone should be working towards that same goal. So everyone should be listening to each other and say, actually, I have this person, you should speak to them. One of the best things about hospitality is that no one gatekeeps. So we should use it.
Yeah. Yeah, you're right. My experience is if you ask someone for help, generally, in the industry, people are really willing to help.
Absolutely.
And really, as I said, sort of camaraderie in the industry in general, I think more so than other industries that I hear about. And people are kind of just interested in what's going on and want to offer advice and help. Yeah. But a lot of the time we work in silos, especially operators, head down, just dealing with all the problems day to day, and you don't get out of that.
Exactly.
That mindset.
And I think it goes both ways. The founders will often think, you can't possibly understand what I'm feeling because you sit in your ivory tower and all you do is look at spreadsheets. And investors will also go, if only you listened, because I've done this 20 times and I've looked at 100,000 P&Ls in the last month.
Yeah.
The perspectives are different, but there's something
Yeah.
to be learned from both sides.
I guess in the examples of the businesses that have worked really well, is it generally the case that both sides work well together and are really aligned and quite open and honest?
I think so. And I think both sides are really aligned on where it needs to go. One of the biggest conflicts is often that a founder would not want to exit.
Yeah. I guess that's it was a difficult one. Is it kicking
Because
out a
you think
founder?
people maybe get involved with investment without fully thinking through the consequences.
You don't think it's going to happen, right?
Yeah, until the end when you actually have to.
You actually have to
walk
do
away.
it.
Now,
Yes.
someone else
And there are
takes
ways and
over.
means where you don't have to walk away, but
Yeah.
that's where the initial conversation matters so much more, and understanding what you want at the end matters so much.
Yeah, and I guess handing over large amounts of control over something that was your baby and you brought this thing up, it's always going to be difficult in any guise. But you're right, as long as you go into it really being clear on why you're doing it and where you want to get to. I guess that sounds like that's the key, is being super clear on your goals at the outset and then finding a partner who matches that.
But you don't take on a business partner without having interviewed them hundreds of times, right?
Yeah,
Sure.
spent loads of hours.
Together,
Yeah.
figured out whether or not you're aligned on your business goals, how you're going to work together, how it's going to work. And yet, I think founders take on equity investment, private equity investment, VC investment, without really going through that process and without really understanding what they're doing
Yeah.
is they're taking on a business partner.
Yeah, absolutely. I mean, it's an intoxicating idea, isn't it? Being given millions of pounds to just go and.
But that is exactly what a lot of founders think. They say, you've trusted me with hundreds of millions of pounds, whatever that might be.
Yeah.
I should now be able to go forward and do whatever I want with this money.
Yeah.
Which is really not the thesis of the investor coming in, who's like, cool, now we're going to try and build this together. And
Absolutely.
I've got some clear views on how.
Exactly. But why did anyone think that wasn't going to be the case?
Yeah, you might not be able to say exactly, it's probably different every time, but what's the sort of ownership levels that get diluted at that point? So when PE comes in, do they basically buy the whole thing?
It just depends, yeah. And it depends on how much money you're putting in, what the structure might be, what the existing profitability is, therefore what your business is valued at.
Yeah, I guess it's pretty the same in every industry, but hospitality it feels like, from the guest perspective, a lot of guests don't understand what's going on behind the scenes in terms of ownership, the economics of a rental versus owned versus invested business or whatever. All they see is that this place has just had £1 million refurb and that place hasn't. And particularly, I guess I'm approaching it from a pub's perspective, where the pub is just the pub, it's just the name, it's an independent, it's not a branded thing. You get this huge disparity between well-invested businesses and independents. And that must be, I guess, sort of intoxicating idea for an operator to be suddenly, I've suddenly got all this cash to do all the things that I would have done and sort of level the playing field a little bit and expand hard. And then, potentially not really thinking through the other end of, I've got to then deliver and potentially then exit in a certain amount of time, or the pressures that I guess keep opening.
Yeah.
Which maybe then feeds into that optimism that we talked about earlier and I can do this, I could do that.
And I think the pressure to open potentially sites that aren't necessarily perfect. So thinking about it from a private equity perspective, once you've deployed the capital, the clock is ticking.
Yeah.
It's the point of no return. The clock is ticking. I now need to get a return within a certain number of years at a certain value.
And how much pressure is exerted from that side on scaling? So quite often you hear that something scaled too fast and it fell apart. There's lots of examples of that in the industry. What is the pressure like internally? Is it just saying you've got to do 10 a year, you've got to do 13 a year, whatever it is? Or is it usually much more of a nuanced conversation?
It is a more nuanced conversation, but that is also where you get help, right? Previously a founder might have 5 agents, property agents, who are giving them whatever they might be. Whereas now they've got the whole private equity network behind them to say, actually, have you looked at this site, that site? You've got access to sites that you've never had before.
Yeah,
you've got off-market, exactly, longer term stuff, pipeline. To your point, the funnel gets so much bigger.
Yeah.
But that still requires you to execute.
Yeah, you're a kid in a candy shop all of a sudden.
But you're also no longer like the sort of creative entrepreneur who can, look for perfect.
Yeah.
You're very much in a situation of done is better than perfect.
Absolutely.
To some degree, and I think we've all been in those environments where that is probably what...
Yeah, seen it from the inside, and it, as an operator, it feels all of a sudden you feel like, right, you're just churning. And I guess the pace of it is very hard. It's interesting, internally, I think the reason why things go wrong is that it's not about private equity putting pressure on. It's about the natural impact of scales. You get lots of people flooding into the business who don't necessarily have that organic, it's not happening slowly and organically. So it takes time to build culture. So all of a sudden you get all these different inputs. It's not necessarily all wrong, but it changes the dynamic in a way that's very hard to understand in the moment. And sometimes, you're just not putting so much rigor around who you're bringing in and their perspective and their attitudes and their impact on the business. And all of a sudden, you're just a different business. You're just it's a different feeling, a different vibe, which sounds all quite wishy-washy, but that's how I experienced it internally. You're taken on sites that aren't quite performing, so your tail gets bigger. You keep getting more optimistic, and then you suddenly realise, right, we're chasing it. The areas get larger for the ops managers and all of that sort of stuff.
Culture dilutes.
Yeah, culture dilutes, and it very quickly goes wrong.
Yeah. This is not a private equity view. This is a personal view.
Yeah.
I think anyone who takes on investment should spend at least 6 months setting their foundations.
Yeah. Do nothing. Don't have this whole pipeline of leases ready to sign.
Yeah, or like maybe you do, but actually that means you're walking into the investment already having set those foundations.
Yeah.
If you're going to do 3 new sites a year, that's great. But do you have the foundations to do 3 new sites a year?
Yeah.
Whether that's training, whether that's operations, whether that's property, whether that's construction, QS, whatever that might be, finance, systems, all of those things.
But the answer is almost always no.
No, because no one thinks about it until you get so big that you're falling over, right? But actually, by spending 3 months, 6 months, setting yourself up for success based on the scale that you know you're going to be, you're going to save yourself so much heartache.
Yeah, absolutely. You kind of remind me of a question I was going to talk about. Is not really about equity. It's more about ops and finance and how they communicate and work together. Building that platform for growth. I've kind of seen growth trying to be done without that platform, or like building it as you're going.
Yeah.
It reminds me of that Wallace and Gromit a bit in the film where he's laying the track as the train's going. You feel a bit like that, and then eventually you're going to run out, or you're going to miss a piece, and you go off the rails. And in those precious situations where you haven't laid those foundations, built the scaffolding, it's so difficult to do it on the fly. And then you get these mad conversations where I remember sitting in a room in a finance meeting with a CFO, and he was sort of having a go, but we were also really agreeing. But we were doing something that was costing us lots of money. But the COO was saying, you need to do this. And we sort of did need to do it because it was like a scaling platform building as a training thing that we didn't have in place. But the CFO saying, well, we didn't budget for it, you didn't plan for it. And so it's going to cost you loads of money and it's killing us. And I was saying, well, you are right. I said, but what do you want, what are we going to do on the ground as kind of the operator in the middle of it?
But that's where you need to find the solution. That's what that relationship is there to do, is say, okay, you need this. If you need this, right? Yeah. So let's figure out how we pay for it, what we can sacrifice that might be a nice to have to pay for this thing. So
I was going to ask you a question about budgeting, but I was just going into it. From your kind of perspective when you're building budgets, things like that, because I think that's how operators interact with finance a lot of the time, through your budgeting process and then finance meetings and ops meetings and stuff. When you are building a budget, do you build it with a bit of flexibility in mind, or is it the gospel truth? If you haven't budgeted something at this point, we can't do it, we have to do it next year? Or what's your approach as a CFO?
When was the last time your budget was right?
Well, this is something I say when I'm teaching junior guys about budget.
As an operator,
I say,
does it?
No, I say the budget is wrong from the moment it's written. So the next day is out of date, it's wrong. You need to understand that mentality, like it's never going to be right.
No.
Because you can't get it perfect. It's an educated guest platform. But having said that, we grew up in a business, and I've worked in some businesses where the budget is treated like it is correct and it's the gospel truth, which is a dangerous place to be. I guess it leads to some discipline, but it's also a dangerous place to be if people don't understand that it's not, because they just work really hard to achieve it, and sometimes to the detriment of the business.
Where
they don't
and the world
understand.
changes, right, in the course of 12
Exactly.
months.
Yeah.
Like,
So
I guess maybe, is it different if you're like, if you're a business that has to present results every quarter versus maybe a business that, we've got a budget because it's good to have, but actually got loads of flexibility in that, like if we're doing better or worse. Do you know what I mean?
Absolutely. But when was the last time you read a press release about performance?
Someone meeting their budget.
No.
Yeah, well, there wasn't loads of headwinds.
But you're not thinking about, is marketing cost exactly penny perfect?
Yeah.
You're thinking about, is revenue in growth?
Yeah.
Is is your bottom line and growth.
And if they've invested more in a certain area.
Exactly. And it's about explanations, right? There are these one-off costs that we didn't
And they've always
foresee.
got good narratives, right? Because a lot of effort, I've actually learned over the last few years, like a lot of finance effort goes into the narrative
100%.
more than, not more than, but as much as just presenting the information.
Well, as a CFO, your job is narrative. Your job is to say no and to provide a good narrative.
To spin the narrative. I like this.
I don't actually spend huge amounts of time on a day-to-day basis in spreadsheets. I spend a lot of time thinking about narrative. And I spend
Like
a lot
internally,
externally, every stakeholder under the sun. That's what you're thinking about. Where do you need to build confidence? Where do you need to do better? Where do you need to do more? What do you need to do next?
Yeah.
I think as an operator, even like COOs, MDs even, they spend a lot of time still in such day-to-day detail. They don't do very much of that. And I think I've seen some FDs and CFOs almost do a better job than lots of CEOs even at really thinking across the business and really thinking at a high level of not doing stuff day to day. They're doing a lot of, what needs to be better? How do we need to think about things? It's fascinating, actually.
Yeah. And I guess the budget kind of question is a lot of the time, especially at the GM unit level, the budget is this thing that, these are hard red lines that you have to deliver. And then quite often, as you go up the seniority, you're looking at a much broader scale and you're balancing things across much bigger business units. And you sometimes don't realise the stress that is translated down if the narrative is driven a certain way.
Yeah. So I'll give you two controversial views.
Yeah, go on.
One is I still have an annual budget, but I also reforecast every quarter and accept that I'm going to reforecast every quarter. Well, actually, I reforecast every month, but a formal reforecast is every quarter because the world moves too quickly now. I think the world of annual budgets that are fixed forever it's gone.
Yeah.
There's no point in it.
And you would update the whole business, like that's a whole update. It's not just like, we'll keep the original one here and we've got this other one. It's almost like it becomes the new gospel.
Yeah.
Yeah, nice.
Yeah. You would understand where it's changed. Again, to the point of narrative, you've got to be able to explain to everyone why my original annual budget was this. And now 3 months later, I've changed it to Y. You've got to be able to explain that. You've got to have the narrative to support what you're saying. You can't just say, well, we didn't do a very good job, so we're just going to reduce the whole
It's all
thing.
been a bit harder.
Exactly.
Okay. And number two?
Number two is I tell my GMs where their pockets of money are in their budget.
Yeah.
Rather than waiting for them to try and tell you.
Yeah. Or hide them, which is what a lot of people do.
I
Squirrel
will
that away down
openly
there.
say there's a bit here and there's a bit there. I also openly say I don't expect every line to be perfect.
Yeah.
And it's never going to be, is it? They're always going to be. It'd be almost impossible for it to always be perfect. And like, people,
I think when things look too perfect,
But you've got to give people the opportunity to be able to do their job properly, right?
Yeah, and you hope that everything aligns, or it should do broadly with the strategy, the ops plan, the execution of it, and the numbers should align, and ideally exceed your projections. But I guess there's a reality of like it's happening as it's happening, sort of. Just fixating on this number that you set 9 months ago doesn't really change what's happening over here. So to your point about like keeping it flexible and moving and understanding, you're in a much better place midway through the year to understand where you're going to be at the end of the year. But I remember being in mad situations where it'd be like, no one spend any money for a month. And you've got businesses that
cancelling gardeners and
no
getting
flowers,
rid of your newspapers in your pods.
All this like mad stuff, and then the quarterly budget tips as some numbers get announced and everyone starts spending loads of money. It's a complete false economy, but that is a really old school world. Maybe that's changed in that business now, but all that mad stuff, and you end up behaving as a business in a really irrational way to try and follow this line that you set a while ago, and everything's changed. That kind of makes complete sense to me. But I would say in my experience you're an outlier in that respect.
Quite possibly.
Yeah. All right, very good. Carrying on the sort of ops and finance, how they work together sort of angle. What do you, as a CFO, kind of look at day to day? So we talked a bit about the budget and stuff. The ops dashboards have been fixed for quite a long time. Sales, labour, some sort of waste or stock metric as you do your stock takes, and then some guest metrics. But there's so much out there these days. So what do you look at from a CFO? Do you just look at the same stuff or something different to look at the performance of the business and where it's at, where it's going?
I mostly look at trends.
Yeah.
I don't really think about a single week.
Yeah.
I focus the vast majority of my time on the future and not the past. So forecast.
Yeah. Yeah.
Whether that's cash, whether that's P&L, doesn't matter. Forecasts.
Yeah, and that was actually something that the business I worked in a long time ago, that the FD there was really good at saying. He had exactly the same attitude of, don't really care about a fixed number. What does that mean? It's all about the trend. If you're looking at a bit of guest feedback, it's like, well, is that better? We're going in the right direction, so it suggests we're in the right path, or are we trending down? So everything we had was trended, and everything was in a context of an upward or downward curve.
Yeah.
I guess that's. But
I don't see a lot of that though. Like,
No.
See quite a lot of different reports and reporting styles. I don't think you see enough trending or trend analysis as part of everyday.
I think particularly if you don't have a very, very seasonal business, that's what you should be looking at. Average, 13-week average.
Yeah.
And then do it, week on week and understand what your upwards and downwards
like how you're
trends
tracking
are.
against that.
Yeah. And actually, one thing that is now possible that was maybe not possible 5 years ago is to combine your numbers with your guest metrics. And actually, if you plot what your guest metrics are looking like, if you then plot what your revenue is looking like,
You just start to see correlation, basically.
Exactly. All you're ever trying to do across anything finance related is to spot red flags, right?
Yeah.
Before they become a big problem.
Yeah.
That's all you're ever trying to do from an operational perspective.
Yeah.
Yeah.
And is there something that you've found works really well to identify when the business is not in the right place or going wrong?
What, like a set of correlations?
Yeah, like a particular bit of data that you like to look at. I guess it's trended sales and things like that.
Yeah, it's trended sales, it's guest metrics. If you are in a high booking platform booking.
Yeah.
None of it is rocket science.
Well, it is interesting. I have dipped in and out of different businesses in the last few years, and then previously, prior to COVID. I'm always amazed that there isn't more kind of work to bring data together in a slicker way and correlate more. I mean, I guess it's really hard, right? I think especially when certain departments, the leadership isn't totally aligned on what they're doing and why. I think, you can end up with lots of like traditional marketing stuff that are kind of cool, like throwing stuff out there, sort of see what sticks to the wall.
Much easier to report on impressions than it is on is the marketing driving sales?
Yeah.
Yeah, and lots of HR initiatives or internal comms initiatives and marketing. I guess those, not having a go at those sort of areas of the businesses, but they are quite hard sometimes to correlate what the spend in some of those things. And I think marketing particularly, quite a lot of the time we get stuff, we've done all these things and we paid for all these influencers to go into our business and do this, and they created impressions or retweets or whatever, but then go into a finance meeting and talk about, we're struggling with sales in all these places. And you think we could probably work harder to understand that correlation, but I don't think a lot of businesses do look at that.
No, but I think it's very difficult in a large organisation who have the resources to be able to do it because your departments tend to be more siloed. Whereas in a small business, your departments are less siloed, but do you then have the resources to be able to do it?
Yeah.
Which I think is why Travis and I have had about 20 conversations about AI and I'm super excited about it.
Yeah.
But I think this is one of the really, really great things that could come out of the AI revolution, whatever you want to call it, is that smaller businesses now have the capabilities to be able to start looking at these, if you want to use a technical term, the qualitative and the quantitative measures together.
No, agreed. And it is exciting as a small business, like my business, to be able to invest in a little bit of tech. We're doing at the moment a few projects that are going to completely transform our ability to have effective data, because we've basically relied on the skill of the operators that we've got in the business to just feel it through up until now. And that's
Instinct.
okay. Well, and when you're one, but also, the sum total of everyone's experience across big businesses and all the past, and we know how to do it. But now we can, if we want to go and, do another one, all of a sudden we do have a platform of data that's amazing, better than a lot of the big businesses that we work for. And it is, it's all AI driven stuff, and it's super exciting.
Get a data lake if you don't have one already.
Oh yeah, I mean, I'm actually just on my way now to see Tom James from Bills.
Oh yeah.
And the first time I ever heard him talk, he was talking about, that was one of the first things they did was build a data lake. Don't really know what a data lake is.
Just all your information in one
All
place.
your data together in one place.
Okay, like a master data management kind of,
Like a
Of
database,
everything.
but I don't know, more fluid? Is that why it's lakey?
Yes, because different things can talk to each other. So historically, a database, you have to match say as
Oh,
a
I
date,
see.
everything has to
Yeah,
match.
right. I
Whereas
see.
a data lake, you can combine things
Lob
that
it all
are
in.
a bit less tangible.
Before we get down a rabbit hole that probably none of us can get us out of, we'll leave it there. So thank you very much, Alison.
Very welcome. That was fun.
We'll probably be getting Alison back when we talk about the budget in a couple of months. But yeah, we will talk more once we know more about what the government is going to be doing over the next quarter.
Wait and see.
Yeah, exciting times. Thanks very much.
Thank you.
See you later.